Why the loss of momentum here?
Well, I think that you got that follow through because a good chunk of the trading community believes that Trump may have learned his lesson on Friday. I think the market action shook him up a little bit, and he realized that finally that his tweets are what can be counterproductive. And so you see he's remained remarkably quiet today, and that's why you started to get that rally. But, you know, when you're putting your money on the line, you begin to say, okay, we're up 100 points. Do we press for further? Well, wait a minute. He hasn't tweeted anything yet. So I think what we're seeing here is a bit of a pullback because of that. I think the viewers want to be very careful to watch them if they turn negative. How they deal when they turn negative will be very important. You see you've got yields coming down again here. And we'll be waiting for the final news out of Italy, whether they can form a government or not. But the key thing, obviously, to watch is the president's tweet. Does he go back to the game? As I say, I'm hoping, along with several traders down here, that he may have learned his lesson and he'll be relatively quiet.
So basically, no news is good news right now, it would seem. Here's what I'm struggling with, though. Nothing has fundamentally changed since Friday. Yes, the rhetoric has changed, the headlines have changed, maybe the tone of the president has changed, but from a fundamental standpoint, nothing actually has. And yet, we've seen these massive moves, these massive gyrations in the market on these headlines. Does that make sense to you? I mean, is this machines? Is this traders? What is, I guess, the sentiment that's going into that?
Well, there's some of it is the machines. You can see that when the headline looks partially negative, you can almost double down on the sell side. But I think that, Morgan, I think it's almost enough if the tone calms down. I don't think you need some actual numbers. Don't forget, on Friday, we had the president tweeting out that Chairman Xi was an enemy of the United States, as was the head of the Federal Reserve. So that calming down is enough to give the market at least other things to look at. So I think what you get is with the tone calming down, now you can look. If you get some big development geopolitically or any other way, then the market will begin to move.
How's the wise trader factoring in the president's statements at this point? I mean, the president said there was a call with China. Was there or wasn't there? The Chinese had a different take on what level of communication there was. Also, this issue of tariffs, he says there are tariffs, then maybe there aren't as many tariffs as he said that there were going to be. And then now he says that there are going to be more tariffs again. Do we believe it?
Well, I don't know that there will be more tariffs, but I would tell you, if you took a poll down here, most of the people would tell you they believe there was no phone call at all. I think the president was spooked by what happened on Friday, was trying to walk it back, seized on the newsprint story about Vice Chairman Lee, who looked like he wanted to proceed with negotiations, and seized on that. Now, the Chinese obviously didn't want to say they made a phone call because that would be somewhat a loss of face, as if under pressure they were crying uncle. So I think the fact that it's just quiet enough is good enough. But now we're going to have to let the market begin to stand on its own. It will be assessing things like where yields are going and where we go. I'm crossing my fingers that the president stays relatively quiet, certainly for the balance of the day, and we'll let the market work on its own internals. Will we stay above yesterday's lows? Where will we go from there?
I think it's interesting that yields are lower in the face of some upside surprises on the data. Consumer confidence, regional Fed, Richmond Fed manufacturing index. Why is that?
Well, I think that they all believe that there is at least one or two more rate cuts coming. So even though the data is better, it's not fully outstanding, and the manufacturing PMIs are in the contraction territory, so that gives rate watchers the assumption that we're going to see lower rates. They don't think Powell is off the hook here.